Hello, traders. It is Thursday, August 29, 2024. Good day in the markets today overall. I mean, the market was pretty much flat. Had a nice up day. It was down, ended flat on the session, but great for our style trading. So when you're a premium seller, can't ask for much more than a market doing nothing. The longer it stays there, the more theta we're going to burn, the more money we're going to be able to make. So excited about that. So I want to take some time today. I'm going to go through the poor man covered call strategy. I'll spend a few minutes on that with you. We did an entire session for our members, so I'm not going to give you everything that I did from the Discord today, but I'll give you a quick overview of what we did, show you what trade we actually entered today. And I'll give you one or two trade ideas from that session. So I will share with you a few trade ideas to at least get you started if you're looking for some particular trade ideas. So we're going to take a look at that. We're going to look at the lazy trader account, see what we did there. Nice gains today. We're going to take a look at the main trading account. Nice gains today as well with that. So let's cover all of this with you. So let's cover the portfolios. Let's cover the poor man's covered call trade, and whatever else may fall out for us. So we'll get into all of this with you. Let's take a quick look at the market really quick. So let me pull up the charts here. Let's take a quick look, and we'll see where we ended up today. All right, so let me get off the screen so you can see. We'll keep this brief so we can get into the poor man's covered call stuff a little bit more with you. But overall on ES today, pretty much a nothingness day. So S&P was up really 22 cents on the session. So nothing to speak of. So we opened pretty much right down here on ES. We ran all the way up, had a nice big bullish engulfing candle, and then came back down here. So overall, bulls couldn't push it up any higher and couldn't get us past this, 56.60 level. So this 56.65 or so has been a line in the sand. We'll even draw that on here just in case we need to keep it in mind moving forward. But this has been a line in the sand that, we've tried 1, 2, 3, now 4 times we've popped onto this area and we can't seem to break it. MACD rolling over, squeeze getting long. It's at the 8 or 9 week or day mark, which all of this gives me a little bit of a feeling that we still may be pulling sideways, rolling over a tad. We're looking at the weekly chart, still in a nice uptrend. Nothing wrong here. In a nice uptrend, we triggered a PSR bullish signal today. MACD is reversing, moving higher. Squeeze is running higher. RSI has been running higher. So overall, the longer term picture remains pretty decent. Shorter term, maybe a little choppiness and some difficulty there. If we're taking a look at the oil trade, this has just been another one of those trades where it's going nowhere. And by the way, I mean, we're still on ES. We're still pretty lofty on RSI on the weekly, and that's something to keep an eye on. Just nothing setting up really well for Strangles for me, which is really what I need to get some going, but I'm not going to force the trades. So here we've got oil on the session today. Overall, oil on the day up nicely. So we had a nice up day on oil. Was up a little bit higher. Still finished right around the 21 EMA. Now, this is really setting itself up pretty good for a strangle opportunity. I've held off on this because of this symmetrical triangle pattern and the fact that we're in a squeeze on here is, I think we could get a breakout in either move, which would not be great for a strangle. But this is probably the best setup of pretty much anything out there for a strangle, in my opinion. If we're taking a look at bonds today, they continue to just trade sideways in this consolidation zone here. Still strong RSI on the weekly, so it's really not set up well, in my opinion, for a strangle. I'd like to see a little bit more of a pullback. It is set up nicely for naked puts and 112s, which is what we have running. Same thing on the 30-year, so that was the 10-year note. The 30-year, a little bit weaker. Now, this is coming down, and I think on the 30-year, we've broken down to the downside, this ascending triangle that we had, couldn't get through it. Couldn't break to the upside. We're trying to hold on to the 21 here. MACD starting to roll over this week. Squeeze fired the last 2 weeks, but this doesn't have the juice to get over it. And I think we're set up here on ZB for a strangle as well. So tomorrow we'll be looking at oil and bonds. We'll see how they open. If we're trading gold in here, just solid ascending triangle. Can't seem to break through it. Today was a little bit of a down day, so inside day, couldn't get through it to the upside. We're still bullish, but we are we're still overbought. So we're bullish and overbought on the weekly. I just don't like any setup here. If we could break through this on the daily, I think we get a nice little, run higher. But the US dollar's been dropping and gold's been getting the full advantage of the US dollar dropping. Now the dollar seems to be maybe putting in a little bit of a base, which is now forcing gold to put in a bit of a base. And you're starting to see, a bit of that same sideways consolidation zone here that we've been in for a little over 2 weeks now. We're going to resolve one way or the other, but it's not set up for strangles. It's not really set up for anything good, because I think if we break out to the upside, then I certainly don't want to be short calls. So maybe put credit spread looks decent here, but it's starting to really stagnate here, and it is overbought on the weekly. So if it rolls over, you don't want to be short puts either. So not a lot of good setups on gold. We're down to just one trade. It's a 112 trade, which is probably the best trade for this. 112 would benefit if we go to the upside. It'd also give us a little bit of a benefit if we drop as well. So I think the 112 is a good setup, but gold just sets up terrible for 112 trades. All right, if we're taking a look at the Aussie dollar here, this thing's just been on an unbelievable V-shaped tear on the daily, but MACD's rolling over, squeeze is getting long in the tooth. You got the dollar starting to base out a bit, which is not going to be great for some of these Forex trades. I think we're starting to see maybe this thing get a little extended. Pretty good shooting star candle here today. So a bit of a inverted hammer, shooting star type of a pattern. This could typically be a reversal. We'll see if we get that at all. And then over here, we're really sitting on pretty much just a doji pattern where it's just indecisive. So we still could go higher. We still could go lower on the weekly. It's not set up well for strangles. Okay, it's still too strong of an uptrend for strangles. You needed to pull back. 112s are still a potential opportunity here. We're not overbought, so I don't think any kind of a call credit spread is worthy. All right, if we take a look at the euro, now this thing is pulling back. So the Aussie dollar's hanging in there great, but the euro is not. It's pulling back, and now the euro is getting closer and closer to this particular top of the channel. The question is, does this act as support and we bounce, or do we get back into this channel that we've been trading in and continue to just chop sideways? That's what I'd like to see, so I could get into a strangle potentially on 6E. On the NASDAQ, doesn't look as good, in my opinion, as the S&P, while the S&P futures have this bit of a consolidation zone, maybe rolling over, holding the 21. The NASDAQ has broken the 21 and the 50 yesterday, bounced back up today, but still triggered this bearish PSR on the daily. You've got RSI pretty much falling, squeeze falling. Nothing great on the NASDAQ. I would say a strangle here might be an opportunity, but I don't love strangles on tech stocks here necessarily. All right, so let's take a quick look at RTY and we'll wrap these things up. Okay, RTY, it's been bullish. It's above the 21. The 21's above the 50. You got RSI, it's been rising, it's above 50. So this all is nice bullish action that we have going on here. It broke out of this range, ran to the top, sold off, a nice stair step higher recovery here. I do like RTY. We're in actually two trades, two put credit spreads. One's up, one's down just a bit. So right now we're pretty much just neutral on these. The newer one is down a fraction, but I got some nice help today. So I think you can go long. Now copper, I like metals. It's a bit of a descending wedge here that we're breaking out of. Big move yesterday and then sold off. Today, just kind of an indecisive move, not really doing anything today on copper, flat for the most part, slightly down on the session. The weekly looks a whole lot better. So the weekly, we're still above the 50. We've lost the 21, but we're still above the 50. We're very close. We almost triggered a bullish PSAR today. We didn't. MACD's recovering higher. RSI has been moving higher. It's not quite above 50 yet. So I like the longer term play than the more so than the shorter term, which is showing a little bit of weakness in here, but still not bad. I think copper is a good trade. We're in a trade on copper right now. We have a put credit spread running. The thing's up 13% in one day already. Silver. Right. Silver, if we're looking at the weekly here, above the 21, which is above the 50. RSI is above 50. MACD rising. All the signs you want to see, close to triggering a bullish PSAR signal here as well. So long trades on silver, I think, look decent in here. It's really holding around this 21. It's not a bad strangle opportunity. I'd consider potentially looking at a strangle here as well. It's overall a bit bearish, but it's overall bullish. So it just, there's just no particular trend. It's just pretty aimless in here. Stair stepping up. Okay, now lower highs and lower lows going down. We'll see what resolves. But the more recent trend here going to be down. Okay, so this more recent trend is down, and that's kind of where, you really want to get nitpicky here, it's kind of where we failed on some of these. So I think I like the trade. I think there's good bullish signs, but if we can't break through this, then I think a strangle opportunity is a good setup here. So those are a couple quick things. Corn maybe basing out. I think soybeans here have an even better chance potentially of finding a bottom here. Man, they're oversold on the weekly. The weekly chart's still a little scary. Looks like a great crop coming in on soybeans. I don't know if that's great for pricing, but big crop of soybeans looks like it's doing really, really well. We're getting some basing in here, so I think they don't set up right for much of anything for me, except if you want to do maybe a put credit spread and just try to bottom pick a little bit here. That doesn't always work well for me. All right, so there's where we are on some of the charts. Let's talk a little bit about the poor man's covered call. So the poor man's covered call, it's a great option trading strategy, provides a lower risk, in my opinion, alternative to traditional covered calls. It's ideal. It's great for traders that want to capitalize on any market weakness while minimizing some of that downside risk. So I'll share a little bit more info with you. I'll jump back on screen. Let's talk about it and let's get into it. All right, so let's talk about the poor man's covered call. So what is it? Well, traditional covered call, it's really where you're going to own 100 shares of stock and you're going to sell call options against the shares of stock that you own. You're going to sell those call options at a higher price. And the goal here is you're going to take an income for selling that. And as long as the price doesn't rise up above that, maybe you're hoping that that'll expire worthless. You keep that income. And even if it does move up towards that, you're seeing a capital appreciation on your underlying shares. If it goes above that, then you'll get exercised and potentially your shares can get called away on a traditional. It requires a lot of capital typically, especially if you're doing it on good quality stocks. Again, you can debate me on the quality, but Apple or Microsoft or a Tesla or an Amazon or an Nvidia or something like that. Those types of stocks, okay, you can do this on, but those are hefty price stocks, going to cost you a bit. If you're using Reg T margin, it's going to be a struggle to own enough shares to really do anything. And in a small account, not really a great strategy. You'd have to stick to something lower, like I hate to even say the word SoFi, but a SoFi or a Palantir or an American Airlines or a Carnival Cruise Lines or Norwegian Cruise Lines, something in that effect. Those are small. You might be able to get away with it in a smaller account. I think that's a perfect strategy for a portfolio margin account. It's going to save you a little bit on the buying power and be a great trade. But what I like even more so is, and one last thing too on the traditional covered call that you're looking at, it's high buying power, as I just mentioned. It's also a lower return on capital because of the significant buying power of owning those shares. But the poor man's covered call, a little bit better trade. So instead of owning 100 shares, I just have to own one contract of a deep in the money call, typically using leaps. So I'm buying an option out of the money using leaps, long-term equity anticipation contracts. I'm buying a leap, much less expensive. If you're in a Reg T account, it's still better than owning the stock. If you're in a portfolio margin account, it's going to give you even more BP relief on that. So you're going to be spending quite a bit less for the underlying, which is going to give you a much higher rate of return because you're selling those covered calls against a much less expensive underlying. Great thing here is it's low BP because you're using options and you've got good leverage on options. Doesn't mean go crazy, okay? But it's going to give you a higher return on capital. Also, you're buying premium, okay, which means you're going to have less overall positive delta. So you're buying premium, okay? You're not selling premium, you're buying premium, which is going to give you some positive delta, but you're also selling premium against it. So it's reducing some of that overall positive delta. The other nice thing on the poor man's covered call is that it is a long Vega trade versus short Vega. And I know that's been, the big subject of everything since August 5th is, Vega, volatility. We saw the Volmageddon happen. That doesn't really affect the poor man's covered call. We'll talk a little bit more about that. All right, so the nice thing about setting these up is they're pretty easy to put in place. Okay, easy to manage. Okay, the maximum loss is really the total cost of entering the position. So if you paid $3,000 for the underlying stock or the underlying calls, and it goes to zero, okay, you're out just $3,000 versus whether you're buying hundreds of shares of stock. Excuse me. Okay, and that dropping, okay, can be a more significant loss for you. The max profit, though, is going to be not only the difference between the strike price of your long and that short minus the cost of entering the trade. So a lot higher profitability on these particular trades. I talked a bit about it earlier. Excuse my voice, it's a little scratchy today. See if we can get through this. But on the implied volatility side, implied volatility really only impacts the extrinsic value of options. Okay? So the more intrinsic value you have, the less it's impacted by volatility changes. So naked puts that are out of the money, okay, that's all extrinsic value. So when volatility explodes, it's going to explode the cost of those options or the price of those options. Okay? But the nice thing here is with these, it's more of a diagonal spread. This is actually a long Vega trade because you bought the call options, which means you're going to benefit from any increase in volatility because those long options that you bought, they're going to increase in value as volatility also increases. So that is a significantly long positive vega trade. Now, you also have the short calls that you sold against it, but those are closer in time. They're less affected by volatility. And the longer option, because it's got a lot more extrinsic value, is going to hold the whole trade up even better in this. So the nice thing here is also those deep in the money options that you sold, that you bought to start this trade. Sorry about that. I'm so used to selling options. Okay. Those long in the money calls that you used to start this trade, those, as the price starts to move up, those options get deeper and deeper and deeper and deeper in the money, which means they're going to gain, okay, more intrinsic value, which means they're going to become even safer trades. So they're going to have less extrinsic as we go. All right. So again, good long vega trades, and an increase in volatility is going to help these types of trades pay off. Time decay works in your favor, especially with the short call option. The long call, it's deep in the money, has very little extrinsic value. It's not as affected by time decay because it's got mostly intrinsic and a little extrinsic value. The short option is going to decay faster because it's pretty much all extrinsic value. So you're benefiting from volatility expansion. You're also benefiting from the effects of time decay. So how do we put these things on? How do we choose them? I'm looking for good fundamental stocks. Typically, I'm not a big fundamental analysis guy, but again, lower PE, higher PEG ratios, good growth stocks, lower volatility, maybe even dividend payers, not going crazy here, not boring stocks. Still, I still think growth stocks are good, but I want something that's generating good cash flows, good solid companies. Okay, so higher quality stocks. Technical analysis, we're using quite a bit to put these trades on to figure out when's the best time to enter some of these things. And I love something that's in a weekly uptrend. So that's number one. It's got to be in a weekly uptrend. In fact, I'm going to share my screen with you here. Let's see if we can pop in. I'll give you a synopsis of my trade. Okay. This is pretty much the trade and all of this stuff that I was covering up here. On this trade, I like something that's in a weekly uptrend. So I want something in a weekly uptrend, long-term bullish views out there. So I want to see something that analysts are also thinking should continue to move up. I would love to see the stock above its 50-day moving average. I would love to see also the 21 above the 50 as well. So is the 21 also above the 50 and the stock's above the 50? Both of those things tell me that this is in a good bullish trend. I'd also love to see potentially a little bit of that pullback towards the 50 as we're getting closer to the 50. I know these things hold up. It's a better trade. I like RSI under 55 to 60, somewhere in that range. I'd also like to see RSI rising if possible, or not dropping like a rock. So I don't need an RSI that was just overbought 3 days before or a week before, and now the thing has dropped a ton like an SMCI or something like that. I want to see RSI kind of flat to inverted. If it can be under 50, great. Under 55, okay. 60, yeah, maybe. Okay, but ideally under 50 would be fantastic. Like high quality names, you can do these on indexes, sector ETFs, and any other fundamentally strong names that you have. I like weekly options on these. I want good liquidity on these. So I want to be able to get in and out of trades. I want to have good bid-ask spreads on these. So weekly options, while it's not a must, I would really like to see something that has weekly options. Okay, I typically will enter the trade around 180 to 365 DTE, depending on maybe the charts or what my feelings are on the overall market health. I'm going to typically buy about an 80 delta call. Then I will also sell those covered calls. Now, you can do a buy right where you're selling the call right away, or you can simply, because you're buying something that's uptrending, is wait till that thing starts to get a little more overbought before you sell the calls, which means I get the appreciation of the underlying, and then I can sell at the top. So if this thing dips over, okay, I'm going to retain the full value of the covered call without really watching the underlying going lower. So I like an RSI rising. If it's over 65 or 70, I think that's preferred. 75 or 80, fantastic. Oh, the more overbought, the better on the RSI. I'd also like to make sure that I'm selling somewhere between 20 and 30 delta for the most part on these particular stocks. Again, this is just a general guide for you. I like to go 24 to 30 DTE out. So I'd like monthlies. You can do weeklies. It just takes a lot more activity, a lot more involved. Technically, if you did weekly, you would generate a little bit more income than one monthly if I did it weekly, but I don't know if it's worth all of the activity or aggravation, depending on how many of these you get on. I would lean more towards 30 delta if I'm seeing a pretty bullish daily chart. Okay, I would lean more, or I'm sorry, a not super bullish daily chart, more like a 30 delta, like something that's flat, maybe even the daily's rolling over a bit, but the weekly's strong. So if the daily's flat to rolling over, not great bullish, let's go 30. Okay, if the daily is strong, we got RSI rising, it's cranking from that 50 and higher level, MACD's rising, we're shooting up there. If we're super strong, then let's get a little farther away, like 20, 25 delta, something along those lines. You can also potentially buy a disaster put for these, which would mean buying a put, okay, equal number of puts, typically, you don't have to, but equal number of puts in the same expiration, around 20% below the current stock price. I'm adding those puts on. Yes, it's going to cost me some money, but it ought to also protect me from any kind of a significant market turn. So I call it a disaster put. And it's using a little bit of the cash, okay, but hopefully we're able to write enough of these calls to generate. So that's the way to get into the trade. Typically, I'm going to close these things out. If they expire, worthless, great. In fact, I don't even have that on here. Allow the short calls to expire. Okay, great. Okay, if not, okay, you can also close these. I'm going to pop this one up. I can also close those covered calls for maybe an 80% or more profit if we're more than if I'm more than halfway or less than halfway into the trade and I'm at half the profit or more. Why wait? We can get out and we can certainly roll it or put on a new trade. So expires, best scenario. Number two, 80% or more, and I see some opportunity, maybe I'll get out. Or if more than 50% of profit in 50% of the time has gone by, then let's maybe get out, take our profit. I could also roll the short put out or the short call out if it gets breached. So I'm looking at that particularly as something we can do. Or I might just close the long trade if I'm below maybe 50 days left in the trade. So I don't want to leave these on, have gamma risk at the end. I just assume get out 50 to 60 days left in the trade. I'll just close the longs. Or if the longs get all the way up to maybe a 50 delta, they start at 80. If we can get up to 50 delta, I might just close. Or what I might do is I might write, okay, another covered call at the same expiration date of the original, and then for the exact same amount of money that we're worth that we paid at the beginning. And now I have a free leap spread. I've paid for the long completely. All I have is a call credit spread that I basically paid nothing for. Okay, and I can let that move. If it goes up, it goes down, it doesn't really matter. But if it goes up and expires or generates additional profit in there, we're going to make even more money on the trade. So there you go. And then I typically will use some scans in TOS to find these. So we were looking today. I'll give you two trades that I liked. I liked CRM. Okay, so I thought Salesforce looked great. We're above the 50. 21's above the 50 here. bullish PSAR above the 200. MACD is rising. You know, the RSI not over 50. Okay, so it's not, you know, it's got plenty of opportunity to move up, but it has been rising. Squeeze has been rising. It's in a squeeze. I love the weekly chart here on CRM. So I think that's one opportunity. We also looked at XLE, which is the energy sector ETF. Yeah, it's above the 21. The 21's above the 50. It's above the 50. MACD has been climbing. RSI is only at 51, so certainly within my range. Squeeze, reversing, and in a squeeze. I think this sets up well. In fact, this is the trade that we put on today. So that was the trade from today. All right, let's take a quick look at the accounts. I know this has been long, but I wanted to cover some of that, my takes on the poor man covered call. So here's where we are overall in the Lazy Trader account. We're up to 207,971. So good day today. We booked $1,400 in profit. We actually closed a complete poor man's covered call. We closed Merck. We closed the long calls as well as the short. We actually, you know, the price hit the short calls that we had sold. And I looked at rolling them, didn't like the prices I was seeing. So what I did was instead, I just closed the entire trade, booked it for a nice 10% winner in like 20 days, which is fantastic return. Okay, so we can't really beat that. So that was the trade that we closed there. So we did add the XLE, poor man's covered call today. So we still have a bunch of PMCCs. We're trading our SPY lead puts every single Monday. Got that strategy rolling. So this account is in great shape, working out very well. So let's take a look at the main trading account. I didn't post yesterday, but we did pull in $450 yesterday in trades. Now, yesterday, though, we did lose a 0 DTE trade. Okay. Had an iron condor on, and that one lost yesterday. So that was our first trade dating back, I think, a month and a half on 0 DTE. So we've had a really good run. We're still at 95% win rate on 0 DTE, but we did lose one yesterday. I'll go into the closing trades with you quickly, and then we'll jump off for you guys. Okay, Delta 369 today. So Delta neutral. Theta's low, 0.22. We're a little low on Theta. Oh, I need to get some Theta in here. My favorite Theta is not only the 111, 112s, but Strangles, and just don't have a lot of Strangles on because things just aren't setting up well. So we're just making up for this with a lot of these put credit spreads right now. All right, and then Netflix at 354, 885, BP 165, which puts us at 37% out there, which is, for us, pretty low. Okay, so we have a boatload of buying power. We also booked $2,100 in realized gains today. Let's take a quick look at what we've closed. So today we did have a piece of one of our hedges, our 351 hedge. The 14 DTE piece did come off today, it's only $140. We did have another 0 DTE winner today. This was a put spread. I alerted members and active trader on early this morning. We took that one off for $425. Market was looking like it wanted to run higher, and it did. So good 0 DTE trade there as well. So these are our two trades today. Oops, you know what? I put the wrong date in. Okay. So overall on the day today, let's go back on our dashboard. Okay. Oh, we did not put in today's info. Okay. So yesterday we made $2,243. Today, $285 was where we ended up today at. So 2243 yesterday. Yes, we did take a loss on a 0 DTE, but we also closed a strangle winner in gold, and we also closed the long, the three of the 6 puts of a 112. We closed those for a little over $2,000. So that's where we are. So yeah, good catch. I am here. Yeah, $285 today, 2,200 and 43 yesterday. I looked at the wrong dates on that. So overall, we're progressing pretty nicely. We're exactly where I want to be. I love the setup of what we got going. We're back in the 111s. We got some 112s on. We've got Strangles running. We've got put credit spreads going. So we're in great shape. We've got plenty of buying power. We'll see you guys tomorrow. If you felt this video was helpful, click that like button down below. Keep an eye on my journey here. Hopefully I'll be sharing how I'm trading my accounts with you. The goods, the bads, but I'm going to share it all with you. Take care, everybody. Bye-bye.